Hey everyone, really excited about this video. So finally, this is the video talking about self-directing your IRA. And just a little side note for business owners, you guys have a lot more power when it comes to creative wealth building strategies because you guys can also self-direct some of your retirement stuff that you set up with your company. You can use creative wealth building strategies early on. So just pay attention to this and know that some of these strategies can apply to your other retirement accounts. So your 401k can be self-directed. So just pay attention to this and then discuss it with your financial advisor or your new custodian for your self-directed IRA whenever you take the appropriate steps. So the first thing I want to go into is why don't you know about self-directing your IRA? Okay? Why haven't you heard this before? Why hasn't maybe your financial advisor told you anything about this? Why isn't this something that is common knowledge to people? And a lot of people learn about this from me when I talk about self-directing your IRA to purchase rental real estate. And if you have it within the Roth shelter, your rental income is then tax-free income. So in retirement, that's huge because that tax-free income does not affect your income for the year. So if you have real estate that's producing you income, that's not going to affect your taxes at all for the year. And also whenever you sell real estate or you cash out money from your Roth, you won't have any tax liability as well. So that's a huge plus for that. Now, why haven't you learned about this before, right? Why is this not something that is pushed and advertised to people? And it comes down to this simple idea. When a financial advisor is advising you about certain investment products, right, it goes through a very strict process by the SEC, the Security and Exchange Commission, who are very, very concerned about investors' well-being. They don't want people getting taken advantage of. They want to try to keep our investment model on the up and up. Of course, that is for civility and structure, right? If we don't have a model that is enforced and work and people are getting taken advantage of when it comes to investing, we won't have the funds necessary for innovation to exist in society. So there's something called due diligence, right? Due diligence, that simply means that the steps are taken, the necessary steps are taken in order to satisfy the legal requirements in order for any exchange to occur, right? Whether you're buying a piece of a company, whether you're buying real estate, whether you're investing in Bitcoin, etc., right? So if a financial advisor is going to offer you financial advice, they can only offer you advice based on things that have a credible due diligence, in which the U.S. government has said these investment products have gone through strict guidelines and have met all the requirements to be safe for investors, in the sense of there's nothing scam about the legality of the business, right? So whether or not the business succeeds or fails is still in question, right? That depends on a lot of other factors outside of the structure of the business, right? It depends on the product, the customer service, and all those other things. Whereas in an investment outside of the stock market, even in real estate, the due diligence falls solely on the shoulders of the investor, right? The investor is in charge of making sure all of the legal requirements are met and that they are protected legally before they do a deal, right? So let's say I'm a financial advisor. Am I going to give you a recommendation to go do an investment in which you are the one doing the due diligence? How do I know what level of due diligence you are going to perform, or even know how to perform, or capable of? What sort of education background do you have? in order to make that assessment. So because of that, I cannot give any advice to due diligence towards something that I have not vetted myself or has not been approved to be vetted as an investment vehicle that meets all the standards. So basically, in a nutshell, right? I'm not going to risk my license for you because I don't know the quality of your investment standards. But when you look at the grand scheme of investments, the most money that is made when you see very, very wealthy people is investments outside of the typical stock market, right? And those investments require education, financial education, beyond just the set and forget model, where you pay a financial advisor monthly and he organizes whatever for you and then, good luck with it. But when it comes to creative strategies, it requires a lot more due diligence on the part of the investor. When you go to do a real estate deal, right? Because you can blanket statement say real estate is a good investment, right? There's a ton of upside to it, very little downside. You keep the principal asset, et cetera, with the cash flow, right? But that doesn't apply to every single piece of real estate property out there. That doesn't apply to every single deal out there, right? You have to create the deal. You have to research the property to make sure the property is structurally sound, to make sure that the appraised amount of the property is worth what you are paying for it and that you can make money on it, right? The plumbing, the electric, the dealing with tenants even. All of that is due diligence that you yourself have to put into evaluating an investment. A financial advisor is not qualified to do that due diligence for you, right? Outside of the investment market that they deal with, in which all the due diligence has been done already, anything outside of that is considered high risk. So even if real estate may not be high risk for you, maybe you are a day trader, and maybe day trading isn't high risk to you. You've spent years perfecting your system, right? Well, that's the due diligence required on your part to be successful in that type of investment strategy, right? It doesn't mean that that's not a good investment strategy for you to take at all, or that you should never take that approach either, right? It's just understanding why they advise the way they advise and why they haven't told you about self-directing. Now to get it into self-directing itself and what that means, okay? So first off, when you self-direct, you have to go to a custodian, right? And that's a special brokerage, which could either be a bank, a trust company, or like I said, like a special brokerage firm just for like holding and housing the IRA. Along with having this custodian for where that money is housed, you are also going to probably need to consult a tax attorney and a lawyer that sets all of this up, and a CPA. And making sure you understand each aspect of the deal that you do when you put the money in the IRA. So when you put the money in the self-directed IRA and you make those investments, right, it's good to have these professionals review all of the details of the investment before you execute it. So even if you're going to self-direct to purchase a piece of property, when you do the agreement, when you do the LLC formation, when you do the contract for purchase, when you do the contract for the company that will be managing the property and the contract between the tenants and all of those details, right? That all needs to be vetted by the appropriate professional. And you're going to need a professional to help you navigate the intricacies and the legal requirements for each deal that you make through your self-directed IRA. And maybe you're like, oh, that sounds so overwhelming. No, that's the point of the wealth building checklist from the beginning. When you start getting these professionals and you start adding to your wealth building strategy, this comes into place, right? Now you start developing relationships with the right team members. So as you continue to grow your own knowledge and expand your investment strategy, you have the right professionals to give you the tailored specific advice to your strategy. So something to note, and it's very important when it comes to self-directing, is prohibited transactions. And these are basically things that you cannot do with your self-directed IRA. Don't try it because if you start messing with the tax shelter that keeps your IRA free from the IRS, if you mess with that too much, the IRS will disallow the entire IRA, right? And that's another thing why sometimes financial advisors will tell you, I don't know if you should be going that route because it's a little higher risk and blah, blah, blah. Yes, don't do this yourself. I'm telling you that right off the bat. But that you can successfully navigate this with the right team of professionals, absolutely. And that it's absolutely worth the effort and the payoff in the end. Because being able to invest in more than the stock market is how you can really accelerate your wealth building. All right? So, some prohibited transactions. You cannot buy a piece of property that you or any other disqualified persons, which you could look that up, live in. You cannot buy a piece of property and then you move into it. It's not allowed. Another example is that you cannot purchase equity in your own business. Okay? So a lot of self-directing to purchase in businesses is for other businesses that you yourself are not running. And there's a lot of details on the rules as far as how that is managed. Also, you cannot loan money to yourself or other disqualified persons. And there's something called stepped transactions. If you try to loan a qualified person the money, and then they loan it to your sister, and then your sister loans it to you, if the IRS finds out about that, you will be in a ton of trouble. They will disallow the entire IRA. You'll lose the tax shelter. You'll have tons of issues with that. So just don't do it. Learn the rules. Have a professional on your team that knows the rules better than you do, and then work the right strategy with your self-directed IRA to build long-term generational wealth, right? And I'm not even saying that you remove all your money from the stock market even. You may leave a portion of it there with your financial advisor and then have a portion of it self-directed in real estate or gold or cryptocurrency or hedge funds or private equity or startups or mortgage deeds. I mean, the list goes on and on. So it's a good idea to definitely start taking the time to learn more about the investment options you have. And a lot of these do not even require you to be an accredited investor to get started in. So these are definite strategies that can help boost your net worth so that you can get that accredited investor status. All right? So hope you learned a lot. Hope you guys have a ton of questions. Ask them below. Invite people to the group. This was an awesome video. I'm sure you guys have more that you want to know about this. So comment below. And again, I hope this opens your mind to what sort of investment strategies are possible and how that this can really change your wealth building model. And the earlier you start, the better it is long term as far as getting that snowball rolling and that compounding interest working in your favor. All right?